Would you ask ChatGPT how much you sold yesterday, what anomalies are occurring in your plans, or how much you'll sell next year? Of course not. Now imagine being able to interact with your own company in that same way through an AI system fully adapted to your operations, delivering answers in seconds based on 100% reliable data. That's exactly what I experienced on October 20 at Arkham Technologies AI in Action event, a refreshing gathering featuring real customer success stories such as Club America, which is using AI to build the most advanced loyalty program in Latin American soccer, or Circle K Mexico, transforming its business operations with up to 100% automation in key processes like sales forecasting and fixed asset reconciliation. With Arkham and its customer-centric methodology backed by continuous technical support, you can automate sales forecasts, evaluate store performance, detect anomalies, and deploy any AI use case your business requires. This platform allows you to unify data and fragmented systems, make decisions based on 100% reliable metrics, solve critical challenges with AI models tailored to your operations. Request your demo at arkham.tech/es/whitepaper and lead your company into a new era of intelligent operations.
Welcome to MexMoves, our weekly podcast on Mexico business and finance. How are you, Eduardo?
I'm doing well, Damien. Thank you very much.
Good. Well, this week we have two interviews. One interview with the top 3 officers at Uber Mexico. They're going to talk about the company's success in Mexico. Mexico City is one of its top 3 or 4 markets worldwide, measured by rides. Uber Eats has also been growing phenomenally, and their plans for the future. And we also have an interview with Juan Guerra. Juan is the CEO of the new Revolut Bank in Mexico that just got its license. And Juan is going to tell us a little bit about what Revolut plans to do with its bank licenses. Most of you know Revolut's the largest fintech in Europe and one of the largest, by some measures, the largest in the world. And then Eduardo and I are going to talk about the U.S. Department of Transport canceling some flights between Mexico and the U.S., interconnection fees on credit cards, a little bit focus on quarterly results from the consumer companies in Mexico, and some updates on USMCA. So why don't we get going? There's a lot to get through today. Why don't you give us some quick wrap up on the U.S. Department of Transportation revoking authorization on, I think, 13 existing or planned routes by Mexican Airlines to the U.S.
Yeah, Damien, that was a bit of a shocking news, although there have been a dispute that's been brewing up, I would say, in the background between the two governments, the U.S. and the Mexican government, regarding how Mexico changed or forced or ordered cargo airlines to the new AIFA airport, the one that was built during the administration of Andrés Manuel López Obrador. That decision by the authorities here seems to have enraged, or I don't know how to put it, U.S. transport authorities, which are not happy. Allegedly, the companies were not happy that they had to do that. Also, there were some problems with the slots, the assigning of the gates for departure and arrival planes, that the U.S. authorities have been complaining. So in retaliation, since they haven't reached an agreement, they suspended any future flights from the AIFA, and apparently the current ones that are going from that airport to U.S. destinations. It wasn't clear. The Mexican president yesterday said that it would only affect new routes, but not previously ones. I don't think it's yet clear how extended the suspension is. But it's a big, I think it's a big blowout for the Mexican government. That airport seems to be a priority project for them. No, not seems to be. It was a priority project for the previous administration. It was meant to gather steam with the new train that will take passengers from Mexico City to that airport in 35 or 45 minutes from Buena Vista train station. And now with the suspension or cancellation of these flights to the U.S., all the plans to increase the number of flights, the number of passengers that are handled through that airport will be severely damaged. So obviously the Mexican president said yesterday that she will do everything in her power to reach an agreement with the U.S. authorities to lift the suspension and renew flights to the States from that airport. But in the meantime, I think it's a very negative news for the Mexican administration, for the airlines that were planning to fly from that airport to the States, and for Mexico in general. We have a World Cup coming, and that airport was meant to be auxiliary to the number of people that are coming to Mexico for that event. Who knows what's going to happen? And I assume that by then, June of next year, all will be resolved. But in the meantime, it's a black eye.
No, that's right. I mean, some of these flights have already been happening, and others were about to go into operation, this week. So it's very real. It's not just a kind of ban on future possible flights. And the airlines Viva, Volaris, and Aeromexico have been notifying customers who bought tickets, how to get refunds or how to get alternative transportation. So these are flights, I think, from Aeromexico to Houston, from AIFA, and from Mexico City, from Benito Juarez to San Juan in Puerto Rico. That would have been a great flight. That's been canned. Volaris had a flight from Benito Juarez to Newark that was going to go into effect any day now, and that's been canned for now. And then Viva, which is definitely the most affected by this, because as we heard in one of our earlier podcasts, they've kind of gone all in on AIFA, has had 9 flights: Austin, JFK, Chicago, Dallas, Denver, Houston, LA, Miami, Orlando, cancelled before launch. As you say, Eduardo, the assumption is with many of these disputes that some kind of agreement will be reached, and therefore not to overreact. But yesterday the market punished Volaris, which is the only listed Mexican airline right now. I think the stock was down about 5% on Wednesday, just after this came out. And obviously, Aeromexico, which is heavily dependent on U.S. Mexico routes and business travel, as we talked about last week, is planning an IPO. I'd see it, unless this is resolved in the short term, I'd see it quite difficult to launch an IPO. Not only because of these 13 flights, but they also said that in November, they'll be looking at additional potential actions, such as banning cargo in passenger planes for Mexican airlines. That would, affect all the airlines, as I understand it. So, it's not just this, but they're even talking about further proposals. So it's bad for AIFA, clearly. It's bad for Viva in particular, but it's bad for Aeromexico, which is in the middle of a very important transaction, which has been kind of delayed a couple of times for different reasons, and it's still appealing or suing the DOT's decision to effectively break up the code-sharing alliance between Delta and Aeromexico, and it's not good for Volaris. Although in relative terms, it's perhaps less bad for Volaris than others. But then you've got all these planes, and if they can't fly to the US, they'll probably have to put them to work somewhere. So it could be kind of more access, a bit more capacity in domestic routes, which could put downward pressure on domestic flights for the time being. Let's hope it gets resolved, especially with the World Cup coming. But I guess it's another sign of, from a Mexican perspective, pretty heavy-handed U.S. intervention in Mexico's kind of trade and policies and tariffs and so on.
Without a doubt, it's another rock in the floor, or whatever you want to call it, for the relationship between the two countries. Chainbound seemed to be surprised because she also said that the cargo airlines that were moved were all happy, allegedly. So I wonder whether that is true first, and wonder why, if it's true, the U.S. government has taken such a drastic punishing action against Mexico's airlines and air traffic between the two nations.
Yeah, I'm guessing that U.S. airline, the obvious one would be United, complaining about losing slots and having political power. And then U.S. cargo companies, DHL, also complaining about not being favored by the shakeup that was done under AMLO, not by Chainbound, but she, again, is paying the costs of some of his policies.
Correct. Shall we move on to the consumer companies that reported, Damien?
Sure. So this companies have just, in Mexico, they've just reported third quarter results. And I thought it was sort of interesting to look at the three big consumer names from a Mexico perspective, at least, which is Walmart, FEMSA, and Mercado Libre, even though Mercado Libre is not quoted in Mexico, its Mexican operations now count as a dominant Mexican consumer play. And, Walmex results were, slightly better than other retailers in the same segment, in the sort of food and general merchandise segment, self-service segment, as they call it here. Those same-store sales were up touch below 4% at 3.9%, and that outperformed the ANTAD. Chedraui was up 2.8. Soriana, which has struggled for a long time, was down 3.2. So in relative terms, Walmart was a bit better than the rest of the sector. That said, the margins continue to be a bit challenging. I think the EBITDA margin was down another 10 basis points due to cost pressures. Well, as we talked about in the previous episode, it's an important quarter for every quarter is important, but it's a particularly important quarter for Walmex because they have a new CEO, Cristian Barrientos, who took over from Ignacio Caride. Ignacio left very suddenly a month ago, having only been in the job for a year and a half. And there hasn't really been an official explanation of why he left, nor, of course, does there need to be. But the general view is that Barrientos, who was the CEO of Walmart in Chile, but before that had been the CEO of Walmart in Mexico and head of Walmart in Central America, Chilean, considered very much a sort of up to basics kind of person, like a supreme operator, and that would help kind of rein in maybe some of the more ambitious long-term bets that Caride had made in fintech or phones or health. And you got a sense of that in the conference call with analysts. Caride said, we're returning to the fundamentals, pricing, availability, e-commerce. Also, I thought it was interesting that they announced a lot of management changes below the CEO level. There's a new COO, who's American, Paul Llewellyn, I think, been 35 years at Walmart US, and a new CEO of Sam's Club Mexico, who also comes from Walmart US, Pratibha Rajakhekar, probably pronounced that wrong. But so it seems from the outside, at least, that they're bringing in, outsiders from Bentonville to sort of get perhaps more control over the Mexican operations. So those are, the company way too early to see to see any effects of that. Of course, it just happened really at the end of the quarter. But they talked in the conference call about what they call One Hallway, which is a unified digital storefront between all the different brands to sort of simplify the online journey. They seem to step back a bit from Cashi, which is their fintech. They're going to be launching digital remittances, allowing customers to receive money directly into their Cashi accounts from the US. But they talked about customer simplicity over new ventures. And it looks like Cash is not going to get into full banking, which may have been a plan at some point. They also talked a fair amount about AI and how that's going to be used to improve efficiencies, improve working capital, turnover, inventory, help merchants pick the right products to sell.
Yeah, I mean, the results reflect what we've been talking about, a bit of the decline in consumer spending over the past few months. Out of the last 5 months, I think 3 of them have shown a negative growth rate. So it's not a surprise. I was a bit surprised on the day after the results that Walmart, well, not surprised, to be honest, because Walmart was trying to put a positive spin after the numbers were not as rosy as analysts and investors expected, but they were quite bullish on saying that the Mexican consumer will be back in the next few months. They didn't change any of their growth stored estimates or investment plans. I think those are long term. They don't need to be modified on a quarterly basis. That would be wrong for any company to do so. It's part of the story that we've seen. I wonder whether the unemployment rate that's been rising a bit, or the number or the lack of new job creation in Mexico, the lack of remesas or the declining remesas has had to do with the results of Walmart for the third quarter that were not as bright as expected.
Yeah, I think the different factors affected consumption, both in the second and now the third quarter, and definitely remittances down 10% was a negative factor. I think the weather, as all of us who live in Mexico City and the surrounding area are very aware of, it's been it's rained more than perhaps a decade now in the center of Mexico, and that's probably affected people going out and going shopping. So that's might have been an issue. Probably, definitely a big issue for the bottlers. Don't feel like a Coca-Cola as much when pouring with rain. And then I think there's also some market share issues with some of the hard discounters, especially Tiendas Tres Bay, kind of doing very, very well and taking some share away from the sort of the retailers that focus more on branded goods.
Yeah, and Mercado Libre and FEMSA reflected the same trend, I mean?
Well, I think no is the short answer to that. To some extent, starting with FEMSA, it had a difficult quarter. It's focusing mostly on Oxxo, which is a retail division, what they call proximity. Same-store sales only rose by 1.7%, and there was store traffic fell a fair amount. I think by about 3%. So and that was offset by a higher average ticket, but still same-store sales in real terms are negative. I think that it was an interesting quarter as well. Is that it's the last quarter that Jose Antonio Fernandez Carvajal, as CEO, is moving to be chairman of the board, and his son, after a very thorough process of looking at all the possible candidates to be the CEO, it was his son was who's very, very qualified, I should say, was chosen to be his replacement, also with the same name. Makes it somewhat confusing. He sort of talked a little bit about what he's sort of planning to do. It's clear there's going to be a kind of some relevant announcements in the fourth quarter. They sort of batted off some questions about strategy, saying that they would have more on that in the fourth quarter. I think as I mentioned, they were affected by the weather, by a soft consumer. There is a sort of debate in the analyst community about whether Oxxo in Mexico is suffering sort of cyclical problems, weak consumer, and as soon as the consumer comes back, you got the World Cup next year, things will kind of go back to the sort of single mid-digit kind of same-store sales growth that Oxxo has historically been reporting, or whether there's we've got too many Oxxos in Mexico, and there's a sort of secular sort of saturation, and that effectively new Oxxos are cannibalizing sales from old Oxxos, and we're not going to get back to the kind of sales growth that we used to have. Now, Oxxo obviously is saying that the problems are mostly sort of cyclical, and that they even mentioned that October was looking much better. But we now that we've had a few quarters, in fact, a year of quite weak sales, and there are 25,000 or so Oxxos around Mexico, it's sort of logical to think that at some point they're going to get into saturation, and maybe that point has been reached. And reflecting that, they talked a lot about opening these sort of niche, these small Oxxo stores, which obviously will not cannibalize as much given that smaller size, and apparently they have a much higher sort of return on capital than the bigger Oxxo stores. But apart from that, some debate about the cyclical versus the secular sort of issues affecting Oxxo, I think there are also some concerns that some of the additional bets that Oxxo is making, like any company has to make to continue growing Oxxo in the US, which people are excited about long term, Oxxo in Brazil, which is growing fast but low margins, and then Spin by Oxxo, which is their fintech arm, that none of these businesses have the same returns on capital and the same margins that Oxxo Mexico has. So if Oxxo Mexico is kind of slowing down and your new bets are lower margin, then maybe it's a less exciting outlook than you had. And I think there's some sort of indication in reading between the lines, and I'm not FEMSA analyst, I should say, so happy for people to write comments if they disagree with this, that they're reining in some of the costs. The Jose Antonio Fernandez Garza, the new CEO, talked about effectively cost cutting coming up at the corporate level. They also said that they're going to delay asking for a full bank license by a year. I'm not sure if it's a delay or if they were always going to do it in a year's time, but the market took it as a delay. So there's some kind of walking back on some of the more expansive bets that they were going to take that might have eroded profitability in the short term.
Yeah, it's an interesting time for FEMSA's new CEO to come on board. He has a lot on his plate, I'm sure. And I was wondering when saturation would come to Oxxo, because you and I, we've seen them grow exponentially fast in the past few years. Maybe more than saturation is the fact that some areas of Mexico are not growing as fast as they could, and the middle class might not be racing as fast as it could. When that probably corrects, we might see Oxxo again expanding the country. Who knows? But it's yes, Mexico is the crown jewel of the company in the proximity sphere, and Brazil and the U.S. have a long way to go before they can be as interesting as Mexico has been for the past 20 years? I don't know, probably more.
That's right. Now, they can offer new products, with existing infrastructure. One of the bets they're making, I don't know if you've had the opportunity to have breakfast and, at an Oxxo store, or grab your breakfast from an Oxxo store, but they're already actually one of the biggest coffee sellers in Mexico. And the early morning is relatively low for traffic. So there's sort of unused store capacity. So they're really doubling down on that. And they're also kind of focusing more on affordability, SKUs, smaller bottles, multi-packs, cheaper tobacco, recognizing the sort of cost of living pressures and the appeal of value right now in the Mexican market. FinTech's an interesting one because Spin by Mexico keeps on growing, but it loses money, and it also cannibalizes, to the extent that it's successful. It's sort of classic innovator's dilemma. It cannibalizes this highly profitable physical financial services business that Oxxo has, where people are paying their electricity bills or telephone bills, or sending money from one person to another through Oxxo, and they or taking money out of Oxxo through Spin by Mexico or any of the fintechs and other banks that they have correspondent deals with. All of that generates a lot of margin. In fact, Oxxo's gross margins were spectacular in the quarter, partly reflecting the financial the gains from the financial business. But over time, you'd expect digitalization to affect that. I mean, Mercado Libre in Mexico, they had challenging margins. In Brazil by design, because they offered more free shipping there. But Mexico numbers were absolutely spectacular. Really contrast with FEMSA or with Walmart, but even more markedly, and I won't go into that right now, with Liverpool. Their total revenues in Mexico were at $1.65 billion, but that's up 44% year on year. And they've been growing at 27 consecutive quarters of over 30% credit. You've got the retail side, obviously, and then you've got the fintech side. On the retail side, I think their gross merchandise volume on an FX neutral, so not factoring in the strength of the peso, was up about 34% in Mexico, and that's in a period of a weak consumer. But in addition to that, unlike Brazil and Argentina, margins were great in Mexico, which meant that Mexico contributed much more to cash flow than in the past. So they're really, really doing well here. They're doing well with younger users that are that like e-commerce to a greater extent, and it's very convenient. Maybe rain helps them a bit. People don't want to go to the shop, so I at least had stepped up my Amazon and my fintech purchases. And then they've got the fintech rails, which makes it very easy to pay with the Mercado Pago card. I'm also a customer and use my Mercado Pago card on Mercado Libre, but also in other arms. And its fintech revenues was $600 million, 55% up year on year, and that's about a tenth of their total revenues. And interesting that the Mercado Pago credit card is really picking up. It's 60% of those fintech revenues. But one of the things that they said was that Mercado Libre or Mercado Pago is measured by active users, is the second largest financial institution in Mexico. So just behind, presumably, BBVA, which is pretty amazing. Now, the amount of profit they make per user is way, way, way below a Banorte or Santander, a Banamex. But if and when they get their bank license, they're in a really good position because they've got all these customers, so they don't have to pay a lot of money to acquire new customers. And then they can start offering new products and start to build up that sort of ARPU per customer. in a fairly organic and not especially expensive way. And they have all this data on people's shopping patterns, which helps them presumably make good credit decisions. So I'm sure that the incumbent banks probably, and we'll get to this in a moment, are probably fairly relaxed on many of the fintechs becoming principal bank, maybe with the exception of new, but Mercado Pago is a genuine threat because of that massive customer base and access to reasonably low cost capital, and frankly because of their corporate culture, which is pretty hard nosed, pretty tough, pretty successful so far at least.
Pretty impressive what you just said, Damien. It's a big success story then, and I would be worried not just if that were the banks, but also the retailers might have already noticed, and I know that they've already tried to boost their digital operations. But it's a great story, and the stock has been doing very well as well over the years. No, so that's a story that needs to be keep an eye on.
Yeah, I mean, recently they've been kind of dragged down and then dragged up again by the sort of soap opera in Argentina. But with Milei, winning unexpectedly big margin in these elections they just had last Sunday, Argentina and Trump obviously backing Argentina to the hilt. Argentina risks come down. Maybe next week it'll go back up again. So that's helped. I would say that overall the consolidated numbers were pretty much in line, but Mexico kind of offset a strategic decision to bring down margins in Brazil by offering more free shipping. So moving on to fintechs, there's actually a pretty big story, which I don't, outside the sort of gossip columns, I don't think it's been that well covered in the Mexican press, partly because it's not yet a fact. But I did want to sort of just draw it to people's attention because they haven't seen it. The CNBV and the Bank of Mexico presented a proposal to dramatically cut interchange fees. Those are the fees that the issuing credit card companies like Nu or Plata or Story or Banamex or BBVA receive when people make purchases in shops. And now that proposal has been submitted publicly, and anyone can make comments. And then based on those comments, there will be a final kind of decision. But normally before they make these things public, there's some kind of negotiation, so that there don't have to be major changes, which can be sort of politically embarrassing between publishing the draft decree and the final decree. So the fact they've come out with this means that almost certainly I would suggest they don't have any specific information. The interchange fees are coming down. So the plan that's been published, and anyone can look at it on their website, is to cut for credit cards. I think the average right now is about 1.9% to 0.6%, and for debit cards, around about 1% to maybe 0.3%. So these are cuts of 50% maybe on average, a bit more based on those numbers. Now, Eduardo, as probably everyone knows, when you buy something in a shop, there's what's called a merchant discount rate, which is the overall fee that the merchant effectively pays, the shop pays, to the array of people involved in the transaction, whether it's a debit card or a credit card. The interchange fee is the biggest part of the so-called MDR, but there are other fees. There's the fee that Visa and MasterCard, the networks, charge, and then there's the acquiring fee, basically the fee that the banks that represent the shops charge, and then you also have the Cámara de Compensación fee. But the interchange fee, which as you saw from this example, can be, on the credit cards at least, could be near 2%, is more than way more than half the total fee that the stores have to pay. So why is the government doing this, and why is it creating so many concerns? Well, they're doing it because they say these very high, in their opinion, interchange fees are driving up the overall merchant discount rate, the overall fee that is paid. It's the bulk of that fee, and that is stopping stores using credit cards or debit cards, and that's stopping digitalization of the economy and leading to over usage of cash. And there's a bunch of data about, which we're all very familiar with, about how Mexico is so familiar with, so uses so much cash. Now, the problem is that the interchange fee, I think there's two problems, is the bulk or a big part of the revenues of the fintech credit cards. And the reason for that is that these banks, Klar, Story, Nu right now, Latacard in particular, don't really have any other products. So, for BBVA, Banorte, they have a bunch of other products. So that's a relatively small amount of their total revenues. But, I was looking up for Nu in 2024, they made $100 million from interchange. Probably last year was, at least 50% above that. So it's a big, big part of their revenues. And if these fees were to be slashed by half, they would suffer quite significantly. The other problem is that they're just, if this goes through, cutting the interchange fee by half, but they're not cutting the other fees that are part of the overall fee that's being paid, the so-called MDR fee. So there's the network fee, the acquiring fee, then there's also not in every case, but in many cases, an aggregator fee. That's what Señor Pago or Mercado Pago charges, or Clip for helping aggregate the payment. So the people saying this is unfair, that the entire focus is on the interchange fee and not on the overall fee. Now, there are also some good things, from my perspective at least, beyond the reduction in interchange fees, which is what's drawn most attention, about basically following up from a Confesse report into the sector, requiring more competition in the sector, which could over the long term be good for the challengers. But I think in the short term, they're very, very focused on this cut to interchange, which is very much in line with the European model. The European regulators have been cutting interchange fees, whereas European interchange fees are much lower than in the US. And just to finish, it's quite a complex subject, but it's a bit ironic that the government is pushing for this reduction in interchange fees to promote inclusion and digitalization, but it's the same government that allows people for free to take out tons of cash from Bienestar, the government's bank, for social programs. If they really wanted to promote digitalization and formalization of the economy, they would cash out from the Bienestar cards and at least charge in the cash machine for usage of Bienestar, because that's, it's expensive to move cash around. So, and if you don't charge for it, that adds to your losses. So Bienestar could be a very effective vehicle for promoting digitalization. And that's something the government isn't doing, but it is doing something that's going to hurt a lot of the fintechs that are promoting inclusion.
What a story, Damien. I'm glad you brought it up. I hadn't seen it. I was one of those who hadn't read the fine print of our columnists here in Mexico. Wow, it's a big decision by the government. Like you said, it might, on the one hand, you could see that it aims to do something, but on the other hand, it's pulling the rug out of other places. So I wonder what the end result will be of this decision to slash those interchangeable fees between the digital process of doing things in Mexico. Wow. You said that it's still in the works, that it hasn't been defined. Like all regulation in Mexico, it has to go through a process of consultation, and then the final ruling will be put out. But we'll have to keep an eye on this, as I think it could be quite impactful on all these new fintechs, and it could be quite impactful on the digitalization efforts of Mexico, for good and for bad.
That's right. Now, I wonder, and this is pure speculation, if it's just a coincidence that these measures don't disproportionately affect the fintechs and not have a material effect on the big banks. So even though the ABM obviously is not supporting this measure, the ABM representing the banking system in Mexico, there's no, as far as I can read from this document, there's no caps on the acquirer fees or on the network fees and so on. So, my suspicious mind makes me think that when measures come out that affect the challengers more than the incumbents, especially when the incumbents have such high margins, may not be a pure coincidence.
Yeah. How I wonder, remember when the government also declared a higher commission for the Afores, everybody was up in arms. In the end, it seemed like it worked okay. This case is a bit more confusing, it has many more diversions to it. But yeah, the incumbents are not going to lobby against it as much as the new guys in the financial sector, I'm afraid. So we'll have to see what the end result is.
Just on fintech, there was an interesting, not large, but interesting transaction, and international, which is the fintech group between Alipay, one of the largest fintechs in the world, the Chinese fintech, announced that it basically purchased a Mexican city-based fintech called R2, which is a startup that powers embedded lending across Latin America. I think Uber Eats, Rappi, InDrive, PayU, and others use its technology to offer credit through a kind of white label model. They haven't announced the numbers. I understand the acquisition price plus for the exiting investors was probably around about $130 million versus maybe 50 million that they paid. Some of the VC funds were Y Combinator, Cometa, FEMSA Ventures, High Ventures. So that's a nice return for them, and 2.2 times multiple. I think maybe 100% IRR from when they first came in. And VC sector in Mexico, which makes rightly a lot of noise, needs some good exits, and this is an example of one of those good exits. And also, I think it's an example of the Chinese and Asian kind of fintechs eyeing the Mexican market, along with all the other fintechs that we've heard about, including Revolut. We're about to get to our interview with the CEO of Revolut's Mexico operations. That said, some observers I spoke to, Eduardo, question whether over the long run, that is, fintechs will be the main losers. They argue that leading digital lenders around the world, in fact, earn most of their revenues from credit spreads and fees, not interchange. And eventually that will be the case in Mexico when the fintechs mature a bit. Traditional banks, especially those focused on prime, relatively low interest rate credit cards, may lose more, which may explain why BBVA is reportedly spearheading the opposition within the ABM to this possible change. In absolute terms, BBVA is by far the biggest earner from interchange revenues, as it's by far the largest combined debit and credit card company in Mexico. And these same people, Eduardo, I spoke to, said that in their view, the burden of this cut, if it happens, will fall to some extent on consumers and small businesses, although obviously banks will also be hit. Mass market credit card customers could lose rewards programs, which are financed out of interchange. Prime borrowers may face higher interest rates on cards to offset the decline in interchange, and smaller merchants might see costlier credit lines as banks look for revenues elsewhere. What's for sure is these types of regulatory shifts happen all the time, and the best companies, and hopefully that's some of the fintechs and some of the incumbent banks, know how to adapt and still do well. I'm sure many of them will adapt to whatever the final outcome is.
Yeah, lots of movement in that world, Damien. And our listeners will be very happy to listen to Revolut. It's a very interesting interview. So shall we move to our interviews?
Sounds good. Well, it's a real pleasure to have with us today the top team from Uber Mexico. We have with us Juan Pablo Eroa, JP, as he's well known. How are you, JP?
How are you? Thank you very much for having me here.
Great. Juan Pablo's general manager, and he focuses on mobility rides. And we have also Daniel Colunga, also general manager of Uber Eats in Mexico. Hi, Daniel. And we have Paula Aguilar, general manager of grocery and retail in Mexico. Hi, Paula.
Hi.
Great. So why don't we get going? This is a question, I guess, both for delivery and mobility. How important is Mexico within Uber's global business? And why do you think Mexico has, from what I've read, become one of Uber's sort of top 3 or 4 international markets? What is it about Mexico that has made it so appealing to Uber's value proposition, both from a mobility and from a delivery perspective?
So I would say there are a few things. The first one is that we have found an amazing product market fit in Mexico from what Uber has to offer and what the consumer wants in the market. And that can go from a very safe mobility option, but also the opportunity to be able to buy different type of products online, whether those are restaurants or groceries. The other thing that I would say is that another big part of the product market fit is the ability to allow people to have an extra income by driving in Uber or delivering in Uber, which has proven to be very beneficial for the population in Mexico. And the third big component was the focus of the company early on. Mexico was one of the first international markets, was the first Latin American market for Uber, and that allowed us to build a lot of our international products and a lot of the innovation based on the Mexican needs, and that also kind of improved our product market fit and value proposition to the market. So I would say that those three were the key factors that allowed Mexico to be one of the top 4 markets for Uber international markets, and that also has made Uber an extremely important company for Mexico.
I can complement. Actually, as a part of the Uber ecosystem, something that we can develop is the strategic partners that we are working with them. For example, we have more than 50,000 restaurants and stores that we provide Uber service in order to continue growing their own channel. And actually, that's part of the ecosystem that we are providing. So we can democratize this part of the incremental channel for their sales, and actually they can have the same access. It doesn't matter if you are mom and pop or you are an enterprise company, you will have exactly the same service having your own restaurant or grocery store within the Uber Eats app.
You bought Corner Shop. I guess that legacy business is the business that you help oversee?
Yeah, great question. Actually, I was part of the Corner Shop acquisition. So actually, the way that we have evolved the grocery business inside Uber is the way that we are creating new technology to support, for example, the fulfillment types that we can offer to the merchants and strategic partners that we have worked with. So actually, just to have an idea, the way that we evolved the technology is that in the past, we used to offer within Uber Eats these kind of restaurants, but also some mom and pops about grocery chains or pharmacy chains. But the way that we deliver in the past is that the merchant or the partner is working on the pick and pack of the products. Right now, and actually we can provide this fulfillment type when the courier is going to the store, they will select the products, pick and pack them, then we'll pay for that, and actually will deliver to the users. And that's a way that we are creating different ways of adding value to the ecosystem that we have. So we're creating new opportunities actually for the couriers in order to receive orders from different type of stores, not only restaurants, but actually we are getting these incremental channels for the partners that we work. For example, it's not only for an enterprise account, like we work with the most important grocery chains in Mexico, like Chedraui, Soriana, Costco, etc. We can enable product and the technology for small mom and pops that they can access to Uber Eats in order to get that sales channels for their business and continue growing through Uber Eats as a complement of their business. Or actually, for some of them, we are their own e-commerce channel.
And Danielle, how integrated is the Uber Eats business, which most people are, highly familiar with the Uber grocery business? Are these separate businesses, or do they work very much hand in hand?
No, I think they work hand in hand. And one thing we've been capitalizing a lot is on expanding opportunities for consumers to think in additional use cases. So, for example, they were familiarized first with mobility, but then we expanded into restaurant, and they had another reason to open the app. And now we have expanded into convenience, into groceries, into many other kind of specialty stores. So what this is basically driving is that you can open one app and basically solve for any kind of need that you may have. And I would say the other option that probably is a good example is that now if you open your Uber mobility app, you basically have the full ecosystem of Eats within the app. And we're seeing that is having more and more traction. People is feeling comfortable on having what we call a super app, where you can get into just one app and solve any of the needs that you may have, either if you need to move somewhere, if you need to deliver something, if you need to buy something, if you are buying something and you need that to be taken someplace or your home. So I think the integration is more and more every time that we're working. And we're working on, I would say, as we call it, one earner, seeing our earners and drivers as one and trying to provide similar experience. And also the consumer. We have one consumer, and we try to solve for that so that we have just one perspective to solve independently of the different businesses that we are or the services that we provide. So that integration, it's relevant for all the parts of the marketplace. Even if you think about restaurants, they have the benefit that although there's a specific set of consumers engaged with Uber Eats, there's another bigger universe on mobility that they are also able to tackle, that they have opportunity to invest, to have more visibility to that universe of users. So this is becoming an ecosystem that is integrated, and an ecosystem that is working not just for consumers and earners, but also merchants. They capitalize on having that integration.
Thank you, Daniel, on that one. And may I ask, do you guys have any studies that show what is the impact on three things, may I ask, on workers' incomes, on small businesses, be restaurants or convenience stores or delivery or any type of business that uses your ecosystem to get their products to the people? And third one, which I would suspect is the hardest to measure, is what's the impact on the environment? Because thanks sometimes to your service, people don't need to drive a car. Therefore, there is a beneficial element to it, environmentally speaking.
Yeah, I think there are different aspects on how we can measure the impact. Some are more direct, and other ones, as you mentioned, more like the consequence of those changes. At the end, the way we move and the way we buy has changed in the past few years since we started working in the country 10 years ago. But some perspective, we have more than 250,000 earners, either drivers or couriers. We have more than 55,000 restaurants and supermarkets and convenience stores into the platform. And something that is quite relevant for us is the relevance of the SMBs. More than 60% of our business is based on SMBs when you think about restaurants and retail. And that is relevant in terms of the impact to the economy, because maybe big brands, they do have budgets, they have big departments for marketing, for the strategy, and so on. But an SMB that has probably one or two employees, they don't have the possibility to get the kind of tech that now they are getting thanks to Uber Eats. Now you can see that pretty much every restaurant that you visit, they also have a tablet where they can get not just orders, but they have a good amount of information, trends, things that help them to make decisions, not just for delivery, but also for their own business, ratings, trends in terms of consumption, what is the time of the day that they are in need of more certain product, for example. So I think there's bridging the gap in tech. It's also another of the impacts that we're driving for the restaurant industry. And in the bottom line, it's also about incremental sales. When delivery started back a few years ago, there was this question whether the consumption occasion was incremental or was cannibalizing restaurants and retail stores. After all these years, we have proved that being present in one channel like Uber Eats, it just brings incrementality sales. It's totally incremental, and probably when we started, we were just 3 or 5% of the total sales from some of our merchants. But now we estimate that we are at least 20% of the restaurant industry revenue in Mexico. That is a huge impact. And for some SMBs, sometimes we're more than 50% of their sales. So that means that thanks to the technology, thanks to Uber Eats, they are being able to reach another kind of user, another kind of consumer occasion. And that is at the end the impact that we're driving. Now, if you translate that 20% in sales for the restaurant industry into what's happening behind in terms of the people that is cooking, that is preparing the package, all the things that they need to create the food, obviously the impact is bigger. So we are proud of what we have achieved, but also it's a big responsibility now that we are such a big percentage of what's happening in the industry.
Yeah, and thanks, Dan. If I can complement it with a few data points that I also think give a little bit more color to your question, Eduardo, from a mobility perspective. When you look at the first 12 years of Uber in Mexico, we have close to 2 million people that used Uber at some point to generate income. and that is a huge number of people that relied on Uber, whether it was full-time, part-time, just like between specific needs, but use Uber to complement or to have a full income, showing to Dan's point the very good economic impact that Uber had in Mexico. There was another component of your question that was the environmental impact of Uber in Mexico. And the way that I see it, there are three components of the great impact that Uber is having in Mexico. The first one is when you compare before Uber, the typical way to take, let's say, a taxi was the taxi to be driving around the city until they can find someone that was raising their hand or doing something to call them, and then pick that passenger. Thanks to the technology, right now we estimate that we gain efficiencies between 20 and 40% of time that people don't have to be driving empty in their car looking for a passenger, and what that translates into is less cars driving at some point in the city. So that is one data point. The second one is overall less people driving. And that has an indirect environmental impact when you, in theory, need less parking, need less space for more cars because you are utilizing way better the asset that is the car. And the third component, that is the one that is a little bit more direct, is the fact that we are onboarding more and more electronic vehicles to the platform through partnerships, but also through incentives that Uber provides to the drivers, and also better financial terms for them to acquire an electric vehicle. Right now, in the platform, we have more than 4,000 electric vehicles driving. And as we increase that number in the platform, you will start getting and even let's say, compounded benefits of everything that I just mentioned, because you have less people driving, the cars driving less time, but also the ones that are driving more time are way more efficient and less with less environmental impact. So that will actually kind of improve or increase the positive impact that Uber is having in Mexico.
In that sense, JP, I remember when Uber started, there was a big controversy with the taxi components of the city in terms that they felt that they were at a disadvantage against you. I don't hear that anymore. I just hear it in some airports where there are issues that some group of taxi drivers don't want Uber to be part of it. What has changed from your perspective that has made Uber more appealing or less controversial in that sense? And what are you doing to win over those that are still opposed the competition that Uber brought to the marketplace?
So that is a great question and something that we have very top of mind as a company. The first thing that I would say is the fact that I think we were able to prove to everyone that more competition makes everything better, makes the service better for the consumers, and it always pushes the people providing the service to improve. And doesn't only apply for the taxis with the introduction of Uber. It is also for Uber with more competition, or even Uber as the taxis continue to improve the service. Uber always had to be in the innovating to make sure that we provide a very good service. That is one part. So competition for me makes things better for everyone, and we should aim for more competition in every market. The second component is the fact that the people like it, the consumer likes it, and it's hard to go against something that everyone likes. When you are part of, you're offering a service that the consumer likes, it is really hard to be on the other side of that, because everyone likes it, and everyone, I would say, the most important thing, everyone likes to have the opportunity to choose whether they want to move with Uber or other ways of transportation. And the third component that is still not mainstream in Mexico, but is the fact that we have been able in some states, like in Quintana Roo, to show the taxi drivers the value proposition of joining Uber, because combined we can even provide a better service for consumers. So we are showing examples in Mexico and in other parts of the world where combining the Uber's technology plus the experience of the taxis in the local market can actually increase the value proposition to the consumers. And once what we have seen in the few states in Mexico where we have taxi into the Uber ecosystem is that the taxi drivers that try the platform, they actually end up enjoying it and liking it a lot and being really engaged with the platform. So it is a process still. We're still working on it, but I think those three components is the fact that is what we have been able to kind of explain to everyone that first we can coexist. We have room for everyone in the industry. Two, that more competition makes the service better for everyone. And three, that combined we can be better than apart.
Paola, for you, as the delivery or the couriers are more on the streets, there is a certain element of concern for their safety sometimes. I mean, especially those that are driving motorcycles or bicycles. What can you tell us that the company is trying to do to give a certain security to the couriers that are on the streets?
Safety is a priority for us across any line of businesses that we have. So actually, in order to focus a lot on safety, we have a lot of in-app communication for the couriers in order to prevent any kind of damage for them. But actually, something that is really important is that each trip or order that from Uber will have insurance. So that's really important for the users, but also for the couriers as well. So even if you have an accident or you are involved in an issue in the parking, you can get the support line and actually communicate with our customer service in order to report any kind of issue that you can have with in this case with a trip or any type of restaurant order or grocery order if you have any type of issue.
Didi was on this program a month or so back and said they had, I think, 750,000 affiliated drivers. And I think you mentioned you had 240,000. Does that reflect the difference in size between Uber and Didi, that they've overtaken you in terms of market share? And does that reflect a different commercial strategy, that they're going for like the mass market and you're going more for the slightly higher quality, higher service upper market? Or try and help me understand why Didi has, apparently, according to what they've said at least, more affiliated drivers.
Well, I think it's a different business model. I would say I would start with that, where we have a higher base of engaged consumers. Because when you think about the actual size of the business, we are the leader in the country. I would say it's more about how many drives or trips each one of the either drivers or couriers are making per day. So basically, it's a good balance in terms of how many people do we need depending on the demand that we have. And that's very intrinsic to the way that every business operates. So I wouldn't take that the number of drivers is an indicator of the size of the business. It's much more about how efficient your technology is, so you can depend more or less on the number of associates that you need into your platform. And I think that's something that it's not only about our experience in Mexico, but it's something that is reflected in our global scale. We've learned for many, many years now in thousands of cities how to be more efficient and how to be kind of provide the best or optimized approach to consumers with a smaller footprint.
How many cities are you now operating in Mexico?
We have the highest coverage in the country. We are in 115 cities operating now.
And how many in let's say in 3 years' time, how many cities would you like to be operating in?
So right now we are the last city that we launched had less than 50,000 inhabitants. So what we are doing now is that we are understanding quite how those cities work, the needs, and the way that those cities operate is a little bit different. So what we are understanding is what's the right business model to continue expanding. There's already a target of some cities to continue. But first we need to identify how can we go after cities that have 10, 15, 20,000 inhabitants and what's really important for them. As you can guess, for example, in a big city, traffic is something that we are solving for. In a smaller city, probably that's not as compelling as it is in Mexico City. So there are other kind of needs that we need to address in those kind of cities.
Yes, and if I can add a little bit on mobility and answering your first question, Damian, on this topic, I would say that I want to be very clear on the answer is I wouldn't use that data point on the number of earners as a proxy for the size of the business. We know that in both line of businesses, we are the number one platform in Mexico. I would suggest that probably it is a different way of accounting for the number of earners. So it's a different way of showing the same data. Like this is such a complex industry that we, depending on whether you use daily, weekly, monthly, you have very different numbers because people use Uber to connect, to drive, to deliver in very different ways. So depending on the time frame that you're using, the number can be very different, and probably that is the difference between the numbers that you are hearing from us and from other players in the industry. I think that is important. To Dan's point, is also like we're pursuing different strategies as companies. But I wanted to make sure that I gave my point of view on that point.
Understood. If we look at innovation and future products, first question I have is on financial products. Is there any interest into moving into that sector in the way Didi obviously has done? And then the second is on autonomous vehicles. We're obviously seeing that in San Francisco, in Austin, now in the UK. I believe Waymo's just moving there. Do you think we're going to get self-driving cars under the Uber umbrella while we're all still alive?
Yeah, I can start mentioning about how we are supporting, for example, the merchants. In this case, we are offering loans to the merchant in order to invest to continue increasing their sales within Uber Eats, but actually to empower their own digital channel to improve their catalog that maybe they will need. And actually, that will help us not only to continue improving their sales within Uber Eats so they can actually complement their own e-commerce. So actually, that's part of the ways that we are seeing with these loans to the merchants and create this opportunity with them.
Yes. As I mentioned, 60% of our merchants are SMBs, and more than 80% don't have access to credit. So that's why we launched this. And whenever we think on credit, probably you tend to think, hey, maybe they need, I don't know, $10,000 for their next store. But sometimes it's just about, hey, I need $500 because I need to take advantage of the price of food lower, and now I want to take advantage of buying that so that I can have a better margin for the next couple of weeks. So it's all kinds of needs. It's a different environment, but providing the opportunity for them to grow through an easy to get, it's like one day to the other, they get the money, and it's something easy for them to continue growing in many different aspects, and with the support from us and also our partner, R2.
But no credit cards, as for now at least. And autonomous vehicles, do you see that coming to Mexico anytime soon? Or do you think we'll be last in the line?
I wouldn't say that it's coming anytime soon, if we say soon, like in a year or so. But I don't think that Mexico is going to be last in line. There is a lot of components that we need to work on as an industry to be able to be ready for autonomous vehicles. A few of those are electric infrastructure. So when you look at autonomous vehicle, the first requirement is electric cars usually. So you need to have that infrastructure in place to be able to bring the technology of autonomous vehicles. The second component is to have a higher selection of availability of autonomous vehicles. And then the third one is the infrastructure of the cities to go ahead to kind of be up par on the needs that we want, right? Because when you look at autonomous vehicle, you need predictability. You need to be able to learn how the street behaves. So when you take all of that into account, it will depend on the work that we do together as Uber, as other actors in the industry and the government. Why I say that it's not coming anytime like soon is because I do believe that a lot of the key players in the industry will focus on creating more adoption in the mature markets like US and some part of Europe. But when you look at what is next after that tier of market, it is countries like Mexico because of the size of Mexico, because of the size of Uber in Mexico. And we know that autonomous vehicles and ride hailing is a great match for the consumer, for the value proposition of the consumer. And also because, again, for the product market fit, like who wouldn't like to be able to be very comfortable in a car, like not like being concerned about traffic, knowing that you will get to your destination. But the future that I see in autonomous vehicles in Mexico, it is actually a combination. It is probably a big volume of autonomous vehicles in big cities and in the course of the cities where you have a lot of volume and a lot of predictability, and then complemented with human drivers for the rest of the needs. So I see more. I see the future as a combination of both, not as one or the other in Mexico. And to like your first question, Damien, is are we going to see it alive? I would say it depends on how long we're going to plan to be alive. But, no, but other than that, I would say that definitely we will see them as we are alive in Mexico.
Yeah, maybe in your case, maybe not in mine, as I'm a little bit older than you. We'll see. So tell us about your plans for freight. Mexico is the US's largest trading partner, as we know, and there's huge demand for more competitive freight, and maybe Uber can play a role in that going forward.
Yeah, so globally, freight is a big priority for Uber because we know that the opportunity is big. And not only the opportunity in terms of the volumes of cargo, but also the opportunity of how much disruption Uber can create or can generate in the industry, given the opportunities that we have to make it more efficient. So freight is a big focus. And I would say that when you look at globally, the priorities are US and part of Europe because of technology and because of some like global opportunities, but then also Mexico because of reasons that you just mentioned, like the connection between Mexico and US, and then the volume of cargo that goes through Mexico. We currently have a team working in freight in Mexico. We do think that in the future we will see more and more focus on freight on Uber, given the opportunities that we have, and also because it is a very good product to combine with autonomous technology. Since like very long routes of freight, it is more predictable, and it also creates more value. So I think the combination of both will continue to be a priority in the future.
And JP, you mentioned a lot working with the government for the autonomous vehicles. The government has interfered in your industry with a new regulatory framework to register workers and give them more of a safety net. How has that worked out for Uber? What has been the experience? What can you tell us about it? Has a regulatory element forced you to raise prices? Has it not impacted that? What's your overall sense of that government interference or intervention or regulatory framework that it set up recently in the Mexican labor law?
So I can start, but Pau, Dan, feel free to add. I would say, Eduardo, that this new regulation actually is aligned to what we want in the long term. That is the making sure that we provide benefits to our earners. Our earners are a core part of our business, and want to make sure that we do the right thing for them. What has been a long time discussion was to make sure that the regulation aligns to the business model. Because it is a pretty unique business model. And that is something that we have been discussing with the government for a few years, and the government has been listening to us. And we have seen that the implementation of the pilot in which we are, because the first 6 months is a pilot, includes several of the components of the discussions that we had with the government in the past to account for the uniqueness of our industry. Obviously, being such a unique industry, it is hard to regulate perfectly. So that is why we are in a pilot, and that is why the government has been very open, and we have been very open to work together to see what works, what can be improved during the pilot, to make sure that for 2026 we get an even improved regulation that is sustainable in the long term, both for the public policy needs that the government is trying to achieve through the regulation, but also to make sure that the business can continue to grow. Because if the business continues to grow with a good regulation, that means even more people with access to social security, even more people with access to good services. So we are working together because we truly believe that our incentives are aligned. It is like we need to continue to progress and to make sure that we get the best for 2026. But for the pilot being, we have seen great collaboration with the government, great flexibility, and we're permanently giving them feedback from what we are hearing from the earners and what we're seeing in the industry to make sure that we incorporate that going forward in the regulation. So I would say that this regulation has been a lot of work, as any new thing in any industry, but something that we have collaborated pretty well, and that we are excited that if we continue to do this well, the target state can be great for the business and for the company. I don't know, Dan, Pau, if you want to.
And in that sense, your earners, what's your first pickup on what the earners are saying or feeling with this new regulatory framework?
Yeah, I think first, just to add a couple of aspects to JP's point, I think a good amount of the effort comes in terms of having the conversation with the government and providing more details and more education on how our business works and what we provide. A couple of examples of that is, one, it's not common that people knows that we for years have been providing insurance in every trip, in every order to our earners. That was not common knowledge, and it was something that the government was not aware. So investing that time saying, hey, we are, as JP mentioned, aligned on what we want to achieve. By the way, we are already doing it. Now let's see what's next on top of what we are already providing. And the other is there was this common belief that we had only like full-time people working on the platform, where this is an extremely casual engagement and opportunity for earnings. So those aspects are the ones that we spend a good amount of time, because we need to find a balance and not to assume that laws that have been in place for 30, 40, 50 years will be applicable to disruptive business as it is ours. I mean, we've been in the country for 10 years, but that is a small period of time for something so disruptive as what we have been able to do. So the education and the time spent, I think, with the government has been quite effective to find the middle ground on how this is going to be effective for earners, for the company, and also achieving goals from the government. And in terms of reaction, I think it's still early to assess. It's been just a couple of months since we've been working. In general, it's a population that it's divided between ensuring that this will not have any impact in their economics, that this is actually going to be something that is on top of what we are already providing. So it's another aspect on which we are spending a good amount of time providing education on how this works, what is that they are getting in exchange, and how this is not heavily impacting their earnings. So I would say that for now, we still need to wait a little bit more in terms of the reaction. The good news is that the business is still growing, that we're happy with the results in the past months. And I think, as JP mentioned, there is still a few months before we can finalize on what the regulation needs to land on the final version.
Great to hear that the government is listening, that you're working with them, and that the earners are understanding some of the benefits. One last question. The World Cup is coming to Mexico, to the US and Canada. Is that a big event for Uber in the sense of moving tourists around the different cities where you provide your services?
It is a big event. I think it's going to be a big event for everyone in Mexico, and we are not the exception. First, from the mobility point of view, there are a few components to take into account, and that we are working with the host cities and with the government to make sure that we can help the country to give the best experience to those tourists that are coming to the country. So the first is we're working with the government to try to make sure that the experience in the airports improves significantly for the tourists. That is the first impression that anyone has from a country. So if you get into a country and requesting an Uber is painful, it is a first impression that you get from how easy it's going to be to move around in the country. So we're working with the government to make sure that we can help the country to give that first impression to the users. That is the first component. The second component is how crazy mobility is going to be during and around the days of the matches, right? That is primarily on the three host cities, right? And there are some estimations that say that for the inauguration, there is going to be around more than 5 million people coming into Mexico City for that day. So just like think about like how much craziness that would add to the city. So we're working with the host cities, and we're bringing benchmarks that we have as a global company from other countries, such as, for example, the experience that the US had with the Taylor Swift concerts, in which we learn a lot on how to be more efficient in moment that is really hard to be efficient because you have a huge number of people wanting the same thing at the same time. So it's very hard to be efficient, and we are working and bringing best practices to make sure that we can provide this value to the host cities and improve the experience for everyone in those cities. And the third component that we're trying to work on is how we can help the country to also make sure that those people want to visit other places in Mexico, because the World Cup is a great opportunity for the three host cities, but can also be a great opportunity for other places to receive those tourists after or before the games. So again, I think the airports play a huge role on that, but we're trying to get into innovative ideas on how we can help the country overall to take advantage of this massive opportunity that is going to be the World Cup.
And I'm sure the delivery to enjoy the matches at home with friends and families is also crucial. If you can bring the drinks and foods and snacks, that will be very helpful to enjoy the match more, right?
For sure. That's actually a top priority from us, because it doesn't matter if you are in your hotel or at home and you eat something from a restaurant, or you just want to hang out with your friends and you can order from a convenience store or the last minute. So part of that is understanding the consumer behavior in order to personalize your home feed and to provide this merchandising that maybe you will see in the offline or the digital campaigns, that when you will open Uber, you will see that part of the merchandising to understand if it is a use case of late night hours. So you will see maybe this recommendation for you, Damian or Eduardo, because we know what you want and what you want to see in our apps. So every user in Mexico will see that in that moment.
Looking forward for my combo.
For sure. I don't think I've been on a meeting in the past 3 months with a restaurant without discussing the plans for World Cup. Definitely lots of excitement for next year event. And we're going to capitalize also on a feature from our platform, which is called group ordering. So we know that there's a lot of people that they get together into a house from someone to just watch the game. So this feature, what it allows is just to share one order from one restaurant among as many people as you want. The feature will allow you to decide which restaurant, by when is the deadline, so you can choose the products that you want, and if the host is going to pay or each one is going to divide the account. So it's a fun way to say, hey, come everyone home, here's my order from Uber Eats, and just add whatever you want to eat, and I'll see you at home. So lots of engagement with that capability, and I think we are really excited of what's going to bring in terms of economic impact for the country and for Mexico.
Now that's thinking ahead, Daniel, in that sense. You read my mind. I want to share the bill with my friends sometimes. Sometimes I want to pay for it, but not always. But having said that, thank you very much, everyone. Daniel, Paola, JP, for giving us the time and letting us know a little bit more about how your business works, what is expected of it, and how it's evolving.
It was a pleasure. Thank you very much for the time and invitation.
Thank you for the time.
Thank you for the time.
Well, it's a real pleasure to have with us today Juan Guerra, CEO of Revolut Bank in Mexico and former head of fintech at Rappi in Mexico. Revolut, as I think everyone will know, is one of the largest fintechs in the world, and it's just secured its operating banking license in Mexico. First time it has a banking license awarded outside Europe. Juan, how are you today?
Doing great. We're super excited. Thank you for inviting me.
Well, first of all, many congratulations on reaching this milestone. Maybe we can kick off by hearing from you directly what products Revolut is going to be offering in Mexico and how they will differ from what's available in Europe.
Sure. So we're excited to be launching the bank. This is the first, as you said, bank license we're granted outside of Europe and the first bank that we operationalize outside of Europe. So it's a seminal moment for Revolut and maybe the history of fintech. Super exciting. We're launching an account. This is the first thing we're launching. The account will allow users to track their spend, split bills, do all kinds of things. We'll also allow users to convert currencies and spend the local currency abroad. So for example, let's say you're planning a trip to Japan, you can buy the yen when it's convenient for you. And then when you're traveling to Japan, you just swipe your card and automatically your card will detect that you're in Japan and will take the yen from your balance. When and if you run out of yen, then we'll start using your pesos, if that's the situation. This is something I'm personally super excited about, will allow users to do P2P transfers instantly and for free. And that means across borders as well. So if you're in the US, you can send money home instantly and for free. Vice versa as well, from Mexico to the US, from Mexico to Spain, from Spain to the US, etc. That's because we already operate in all these three countries, Mexico, US, Spain. So users can just send money to each other like you'd be sending a text on WhatsApp. And that, we believe, can change millions of lives here in Mexico. And the other product that we're rolling out early on is international transfers. So say you want to send money to pay for tuition in a school abroad, for example. You can do that even if they're not Revolut users, and it costs you a lot less than it would with a traditional bank, and it's typically a lot faster and smoother too. And we're going to start also testing credit cards this side of Christmas. So those would be the initial products for a limited number of users. We're starting out with what we call a beta launch to have users give us their feedback, tell us what they like, what they don't like, so we can make adjustments in advance of our full launch early next year.
So you mentioned credit cards. I mean, that's interesting because as I understand it, credit has not been a driver of revenues of Revolut in Europe. Is your idea that credit is going to be a bigger part of your product offering in Mexico than it's been historically in your other markets?
100%. Horses for courses, right? In the Americas, it's a credit first landscape, and the credit card is very important here.
Because I think, and correct me if I'm wrong, that credit is broadly defined as about 75% of the profit pool of banks in Mexico. And payments is much lower margin, and especially if you're going to be offering it very, very inexpensively to your customers. Would it be fair to say that without credit, it would be difficult to be profitable in the Mexican market? And then my next question, if you agree with that, is if credit hasn't been a big part of Revolut hitherto, what kind of expertise do you bring to offering credit in the Mexican market?
Yeah, let me answer your question in a slightly different way. The main feature of Revolut is, and the main value proposition to our users is that we will bring all of the financial services that you need in a single app, right? You can finally say goodbye to granddaddy's bank because you can put your salary in Revolut. You can get your credit card from Revolut. You can get your debit card from Revolut. You can invest your money from Revolut. All of your needs will be met by us in a single place. Today, users who are interested in optimizing the way they manage their money typically have, a traditional bank into which they pay their salary, they get their salaries paid. Then they have one or two credit card company apps. Then they have maybe, I don't know, an investment app, and another. Before you realize you're dealing with 5 or 6 different apps, and having to move your money across all these different apps is such a hassle. Well, that ends with us. We'll give you a one-stop shop for all your financial needs. So that, of course, includes credit, it includes investments, it includes anything you could potentially need.
Juan, in that sense, are you aiming at a specific socio-demographic type of Mexican, or Revolut will try to reach every Mexican possible?
The latter. We want to be the WhatsApp for financial services, right? Everybody in Mexico, more or less, uses WhatsApp in different ways and depending on their circumstances, but everyone needs to communicate. Similarly, everybody needs a place to protect their money. They need a way to move money, etc. Now, Mexico has a disproportionately large group of people who are not participating in banking, right? And that might be because the offer is not compelling enough, or because of fear of taxation, or a mix of factors. But we want to set the table such that it becomes really easy and smooth for anybody who does want to participate in banking to do so. And coming back to this idea of instant free money transfers from the US to Mexico and vice versa, that we believe can be really compelling to a lot of people. But of course, there's other elements to this, like having, the ease through which one can do cash in or cash out is also a factor. That's something that's on our radar. We're not naive to that fact. So we will be incrementally adding more and more features to the product that will speak to more and more users across the social pyramid.
And piling on Damien's question, these features obviously, you just sparked my interest on Revolut in the sense of transferring money within territories or between Mexico and the US. I might go to live there for a while. Is that the hook? Is that the enticement that will then lead on to credit and the more profitable elements of your business model?
It could be. It depends on your circumstances, right? If you're just turning 18 and you needed a credit card, for example, we'll make damn sure that our credit card is very compelling for you. And maybe you get to know us through the credit card. If you're moving to the US and you need to send money to the US to pay for, a place that you're going to be renting there for a while, then maybe you first experience Revolut through an international money transfer. And that experience should leave you such a great taste in the mouth that you then decide to, try the other products.
And this international transfer, obviously, it could be accomplished to other institutions, or you have to be a Revolut member?
Yes. So P2P transfers are only for users, instant and free. But international transfers, you can send from Revolut to other banks. And they're not instant and they're not free, but they're very fast and they're very cheap.
How fast and how cheap?
It depends on the bank and depends on the rails we use. So it varies country by country.
And the exchange rate, it's competitive, obviously.
It's super compelling. So you'll see. Like we're going all out. We want to be extremely compelling in each individual product, and quite frankly, irresponsible not to use when you bundle them up together.
And how much are you investing in Mexico to start up this process?
Yeah, so to start, just over, let's say, $90 million, more or less, 1.8 billion pesos plus, just for starters. I would expect to invest a chunk more in the next 5 years for sure.
Nu has gone to about 13 million customers in Mexico, and maybe more than half of that are in their deposit product. And they've been initially, especially, they were offering very compelling returns, as high as 15% in some cases. Are you also going to be offering attractive rates to people who open accounts and leave savings with you?
We will for sure offer attractive rates and attractive everything. That's the beauty, right? We came here to compete aggressively, but we want to do it in such a way that it's sustainable in the long run, and that we don't leave anybody feeling like we changed the game midway. So we would very likely offer things that we can sustain over a period of time without making very abrupt changes.
Understood. Well, Juan, thank you very much indeed for coming on MexMoves. Wish you a lot of luck. As I mentioned when we were talking before the episode began, I'm a very happy customer and very much hope that you're a big success and bring competition to the Mexican financial sector.
Thank you so much. That's what it's all about. And I hope you become a happy customer too, Eduardo.
I have my son already in your pocket, so I might do that too.
Excellent. Thank you, guys.
Well, that's it for today's episode. We hope you enjoyed it. We'll be back next week with more on what's moving Mexico's business and financial world. Don't forget to recommend us, rate us, and subscribe. Hope to see you next week.
Would you ask ChatGPT how much you sold yesterday? What anomalies are occurring in your plans? Or how much you'll sell next year? Of course not. Now imagine being able to interact with your own company in that same way through an AI system fully adapted to your operations, delivering answers in seconds based on 100% reliable data. That's exactly what I experienced on October 20 at Arkham Technologies AI in Action event, a refreshing gathering featuring real customer success stories such as Club America, which is using AI to build the most advanced loyalty program in Latin American soccer, or Circle K Mexico, transforming its business operations with up to 100% automation in key processes like sales forecasting and fixed asset reconciliation. With Arkham and its customer-centric methodology backed by continuous technical support, you can automate sales forecasts, evaluate store performance, detect anomalies, and deploy any AI use case your business requires. This platform allows you to unify data and fragmented systems, make decisions based on 100% reliable metrics, solve critical challenges with AI models tailored to your operations. Request your demo at arkham.tech/es/whitepaper and lead your company into a new era of intelligent operations.